In this video, we'll talk about edges in the market and sort of which ones do I employ on a consistent basis. What is it that I'm doing and repeatedly executing, and basically what does what does edges mean, and what significance do they represent when we're trading and investing on a day-to-day, week-to-week, month-to-month, year-to-year basis. So to start with, what is an edge, right? If you've read Mark Douglas's book, it sort of says it fairly well. It's basically when your probabilities favor you a little bit more for a positive outcome versus one that could be a negative outcome. So an edge is basically increasing your chances of a positive outcome. And what we call edges, or another word that you will see in our service, is the fact that we refer to edges as winning characteristics. So these characteristics, prior leadership stocks exhibit these. And what we're doing in the markets is we're basically learning from them, and then we go out and hunt for these characteristics in the market. The important thing about edges is they could be executed repeatedly. So these are, fairly set. You write them down in what you could call a business document, because you have to approach your trading and investing as a business, and you say that these are the edges that I have where the the probability of a positive outcome is much greater than a negative outcome. And you have to have what we call mind clarity, right? You have to be very clear about what these particular edges are. If you don't know them, if you don't have any, that means one of the things is that you are likely in the consistency phase and you are a stage 1 trader, right? How do we come up with these edges? What are these edges? That's the point of this presentation, to sort of guide you on the initial edges that you could employ in the markets to continue to trade within the consistency phase and have a list of edges that you could go out and execute in the markets. The second thing is that we have to make these particular edges sources of income for us in trading. We could, we see them on the charts, we execute them, we make money from them so that we could see a higher equity curve on a week-to-week, month-to-month basis, and then we repeatedly execute that same edge in the markets to draw an income from. Last but probably the most important is they must be self-studied. And the key word here is self, right? You have to do deep dives on your own, even after this presentation, where you pick an edge, you study an edge. What we mean by deep dives is you collect hundreds, if not thousands, of examples of these edges so that you can build self-confidence, and at that point you have a true edge in the markets where you know that the probability of a positive outcome for that particular edge that you collected hundreds and thousands of charts on is probably a good one, because you've now developed instinct in the markets, and you're trading off of that. You develop a feel for when it's going to work. You develop a feel for when it doesn't work, and at that point you've mastered one edge in the markets. So give this a thought. This is basic. What is an edge? Again, it's a winning characteristic, increases your probabilities of a positive outcome. You hunt for those characteristics again and again. You make them sources of income, make them a source of income in your trading. You do deep dives to build self-confidence, right? And you study them on your own. As much as I would love for everybody to just follow me into everything, it's just not possible. And until and unless you build that self-confidence, you will always be a step behind, and you won't trade on your, the feel for the markets, and then you won't master that edge if you haven't collected hundreds and thousands of examples for those edges. So let's move on now to the next slide. What's the first edge that I have in the markets? First edge that I have in the markets is one that I've developed quite a few years ago. I would say about 8 or 9 years ago now. I've started sharing it with people just recently. After I've developed those methods and studied them, I feel comfortable that these things work again and again and again, and they could be executed repeatedly. So our market edge, there's a separate video on it that covers it in depth. It's basically, we post a daily plan 1 hour before the market open. That daily plan gives us a true market edge, keeps us on the right side of the market, and it's split into BP, which is the bolded pivot level, and IP, which is the intermediate pivot level. There's an in-depth video covering the daily plan. Each section that you see here is covered in that particular video. And this particular edge in the markets keeps you on the right side of the trend. So this is basically the M factor, and it takes care of this M factor, which you could call the M in Can Slim. So that's one of my first edges. We post it every day. It's one of the most important parts, especially when the markets get turbulent, or we see the uptrend under pressure, or markets going through corrective phases, things of that nature. This particular daily plan is going to keep you on the right side of the market on a consistent basis, repeatedly, again and again and again. So let's move on to the next slide. The next one is the highest volume edge. So what you'll hear a lot is the fact that the highest volume ever, the highest volume in over a year, the highest volume since IPO, the highest volume since last earnings. So these particular characteristics are what we classify as visible accumulation on the charts. So this is visible accumulation, where we clearly see this volume on the charts, and we put these particular tickers on what we call the TL gappers watch list, which you could go to the key watch list blog that's on the website to learn more about what's the criteria for each of them, the reasoning behind each of them, and why do we pick a gappers watch list, a HDF watch list, and the IPO watch list. What's the reason behind picking these three key watch lists to maintain on a weekly basis? And if you just think about it logically, we'll go over examples in a few, is that this is visible accumulation on the charts. This is clear as day. Everybody sees it. Institutions are not hiding themselves. It's on the charts. It's there for you to look at every single day. And it's the most basic edge that you could have if you look for it, again, on a consistent basis, and you repeatedly execute this edge so that you can master it. And once you master it, it becomes a source of income for you in the markets. Why do we see this highest volume edge in the markets? There are a few reasons for that. One of the first ones is new information. The market is caught off guard. So if there's positive news, or there's a positive catalyst, right? It could be earnings, it could be news, it could be downgrades, upgrades, things of that nature. The market is caught off guard, and as soon as the market's caught off guard, we see a spike in volume that shows up clear as day on our daily charts. So just think about it logically. I mean, supply, demand, the basics of supply, demand, and what we're trying to exploit in the market remain the same, right? And what this tells us is basically that there's an accumulation on the charts, and these sort of things, the emphasis, like the highest volume in over a year, highest volume since IPO, highest volume since last earnings. These are things that have developed as I see market action again and again and again in the markets. So it's always, a process that I'm continuously improving, right? By the time you're watching this video, it might have changed a little bit or tweaked a little bit or things of that nature. So it might be, you might be watching this in December 2021 or early next year. So these things are constantly evolving where I started with just, high volume, and then it evolved into, I'm seeing this particular ticker with the highest volume ever, right? And then it evolved into, I see this particular ticker with the highest volume in over a year. And those are consistently winning. So you just have to be curious about market structure, right? If you notice something in the markets, you could personalize it. You have to go study it, and then you make it an edge in the markets. So now enough talk. Let's cover some examples to go over this. So a recent example in 2021 has been this particular ticker, which is 40 million in volume, and this was the highest volume in over a year with a high closing range. So this is, again, what do we call this? Visible accumulation. It's a characteristic. This particular name would go on the TL Gappers watch list, which is one of the 3 key watch lists that we maintain. And then this is a edge in the markets that's clear as day. And then the next step, which I will cover in probably another video, is going to be entry tactics, and we'll go in depth into, once you have this on in your universe and you have this edge on the charts, how do you actually enter the name to get a return out of it. Let's move on to the next one. The next one is, if it wants to, is Snap. So Snap was an example of the HVE, right? The highest daily volume ever. So that sort of volume, again, is obvious. It's visible accumulation. We see it on the charts. Everybody knows it. And this is something that, again, you could consistently track on the TL Gappers watch list, or maintain your own Gappers watch list. So that's, and make it, master this setup, and then make it a source of income for you in the markets. So that's, again, if you consistently track this and you repeatedly make it a point for you to track this sort of action in the markets, you will see it again and again, and then that gives you a chance to be in these sort of names and make them sources of income. The next one, this particular example, I'll pause for a second. You guys could guess what this could be. And this one is fairly obvious. Again, this is the highest volume since IPO day. So what we call this is HWIPO. And then the other thing it has is the highest volume since IPO week, right? So it has both of them. This is the highest volume since, so IPO week is day 1, day 2, day 3, day 4, and day 5. This is the highest volume since IPO week, plus the highest volume since IPO day, which is day 1 right here. So just tracking this particular, characteristic, how did I come up with it? I was curious. I was seeing stocks do this again and again. And when they did do this, it sort of, got me interested on, I see a lot of IPOs doing this and really moving up and out thereafter. So first is, again, you observe a characteristic, then you study that characteristic, then you make it an edge for you after you study it, and then once you study it, you also master that particular characteristic. Once you master it, it becomes a source of income, and then you repeat that loop for the next edge that you want to have in the markets. So that's a few examples on high volume since IPO week, high volume since IPO. And then this one, which is the last one, is the highest volume since last earnings, HVLE, which is basically what it means is this is the highest volume since IPO day. This was on a earnings catalyst. And then we see follow-on volume coming in on this particular day, right, which was the highest since the last earnings cycle that this particular name had. So this is still a winning characteristic, right? You learn to spot these. Again, how did I come up with this? I was noticing that once a stock had a highest volume, HV, E, or HV since IPO, HV since IPO week, they would have this follow-on follow-through volume, which would be the highest volume since last earnings. So you just add, it's all the same edge, which is basically high volume, but there are different things to be looking for in terms of classifying it as one or the other in the markets. So that's another one that I consistently look for, and then we place it on the Gappers watch list. So moving on, the next edge that we have in the markets, and this one is fairly straightforward once again, is the relative strength edge. So if we think about it logically a little bit, is when the market is coming in and sort of pushing stocks down again and again, throughout the universe, and we see stocks that are sort of trying to, either hold up or even outperform the markets in those particular, dull markets. There's only one force in the market that could do that, and that's institutions. It's a big sign of accumulation in the markets, right? And that it tells us that this particular name might have an institutional bid, because the only force that could hold up a stock while the market is coming in is institutions, right? And the RS edge basically tells us that these are the stocks that are outperforming. And one of the things that you'll notice is pretty much every leader in the markets, or every eventual leader in the markets, will always exhibit relative strength at some point in time, either in a uptrending market. So if a market's going up, the stocks will go up twofold, threefold, or when the market's coming down, the stock will either base, right, and not, outperform the markets while the market is coming down. So this is a fairly basic, straightforward, again, if we think about it logically, it makes sense. So this is one of the edges that we consistently exploit and talk about at TL Private. Now, the other two additions to this recently have been RS zones, and very similar to the HV concept, which is basically visible accumulation. We have HVE, HV1, HVIPO, HV IPO week, right? And HW last earning cycle. So very similar to this, we have RS, which is your typical, vanilla RS. Then we have RS new high before price. This is a characteristic that Ross came up with, or one that Ross basically taught me to look for again and again, because he noticed this while he was working at William O'Neill and Company. Then I've added my own, which is RS zones and RS days. So these are particular concepts that I've studied. A typical winner in the markets will outperform the markets 61.9% of the time, while the market is in correction for it to be considered a leader. So that's just one of the stats that when I did the study I came up with. And if you have the Leadership Blueprints course, you could find the full details on that, where we have multiple annotations showing you this particular stat. The other one is RS zones. I have an example with multiple charts in the slides coming up. And so you basically, you have an edge, and then you develop that edge after you notice different characteristics and things. And this is a process that takes years to sort of, you continue evolving what you're doing, you continue evolving, you continue innovating in the markets, so that you could keep your edges, sharpened, and you're constantly a step ahead on that front. So let's get into a few examples. Enough of this theoretical talk. So I'll pause for a second. And this particular example is basically the price remains below this intermediate high or all-time high, and the RS line screams higher into new high ground. So what we call this is the RS line is making a new high before price is making a new high. So this is your RS new high BP. This is mostly useful in corrective markets where the indexes are in correction or under pressure, or when the market is below. So corrective markets, that could be your IBD definition, if you're aware of it, or when we're below the bolded pivot level, which is our market edge. So let's move on to the next chart. So this particular chart is showing what I call a RS zone, where the market's coming off of highs, right? This dotted line, the dotted line here is the S&P. So the market's under pressure, and this particular stock decides that it wants to buck the trend and really perform in this time frame, right? We're seeing higher lows, higher highs. The RS line is rising. So this now becomes a RS zone for this particular name. What that means is basically the market is still per IBD in correction, but we are above the bolded pivot level now as of this recording. So I view this area as an area where if price does come in eventually, we will likely be supported by this particular RS zone. So even though the low of this RS zone is all the way down here, but the high of this is here, so it's logical to be watching this area so that if and when price comes in, right, we would see support in this area because the stock was bucking the trend in this particular area. So this is an ongoing study of mine, but I did want to share that, we have the vanilla RS, we have the RS new high before price. Now I'm adding RS zones because I feel, and I have quite a few examples of this on my ongoing study where price comes in and is supported around those RS zones. So the next one is a addition. So this one is Ross once again pointed this out to me quite a while ago, back in 2014 and 2015, is the Launchpad, what we call now the Launchpad. The setup itself is basically KMAs are bunching up. So if we again think about it a little bit logically, just give me 1 second. Okay. So if we think about it logically once again, what this basically means is on a 10-day basis, 21-day basis, 50-day basis, and 200-day basis, the price of a particular stock has closed, relatively at the same spot on a 10, 21, 50, and 200-day basis. That's why we called it the fact that the key moving averages, and these are the key moving averages that we use, the 10 DMA, the 21 DMA, the 50 DMA, and the 200 daily moving average. When they converge and price has been closing at about the same level on all frames, on all of these frames, it causes what we call a launchpad effect, where the price has to pick a direction and trend in that direction. And this is something that we noticed constantly early in this application software run in the markets, where we saw constantly, I think Coop back in 2018 was a good example. There's a ton of OKTA. When you're coming out of corrections and themes are developing, you will see launchpads develop, and you'll see the reversal of a trend, within the base itself. And that's the methodology and the reason why we came up with this sort of characteristic and edge in the markets. When we see a launchpad, we're expecting sharp directional movement out of that and the stock to pick a direction, either up or down. And especially when the market's coming out of corrections, this sort of characteristic and edge will show you the themes that are going to be trending for the next uptrend in the markets. So let's see a few examples of this. So one of the first examples here I have is, let's just say, the chart doesn't matter, but what happens is the stock's sort of been trending up and down, and then at this point, what we see is the fact that on a 10-day DMA, 21 DMA, 50 DMA, and 200 DMA basis, the stock's been closing relatively around this spot. And what happens is we get big directional movement off of this launchpad. Now, it's important that any edge in the markets is not absolute. So we did develop a launchpad here, and we get directional movement to the downside. So this is an edge that tells you it could have been up off of here, but it didn't, and it took the other direction right about after forming this 3-day launchpad. So let's move on to another example for launchpads. So this one, again, the ticker is Dash if you're wondering. So price has been, sort of in a downtrend, not really doing anything. And then we get a big bar, and that tells us that we start to see a launchpad setup that is forming, right? So we anticipate direction, we get initial movement, price drifts in, we're still forming a launchpad, and then we get direction up and out of this. So again, launchpads tell us that price has basically built up some sort of energy that's going to launch it to the upside or launch it to the downside. This is where we get directional movement out of this particular edge in the markets. So let's keep going. So if you're wondering where to get this, this is one of the scripts that we published for TradingView. It labels the launchpads for you. And if you want to learn more about launchpads and really get into the details of it, we have a full write-up in the Leadership Blueprints course over at TL University. The last example of this, and this was Coop back in 2019, if you're wondering. So COUP, it formed a fairly large launchpad, and then price went through that level, and we went up and out for a fairly large rally where price is building potential, right? And then we either get direction down or we get direction up. And in this case, we got a big directional move up. If you go study Coop in 2019, you will also see RS new high BP, RS zone being built, and the number of RS days within that correction was greater than 60%. So this particular setup, I remember trading very aggressively in the markets because all my edges, or many of my edges, lined up, and that's what gives you conviction, because I've studied those particular edges, and then you make big progress.